Good morning, everyone, and welcome to Where's the Funding, hosted by the Fiber Broadband Association and sponsored by Broadband.money. I'm Gary Bolton, the President and CEO of the Fiber Broadband Association, and this is our first episode of 2023. This is a 12-part series designed to help you understand, navigate, and obtain matching funds for broadband grants. The NTIA BEAD program requires broadband grant applicants to come to the table with a minimum of 25% matching funds and a letter of credit up front with the application. For many small and non-traditional providers and communities, this may sound daunting, but it doesn't have to be. This 12-part series is designed to help you understand how and why meeting these requirements can be straightforward. Each episode will be 30 minutes, and every month you'll hear from top industry experts on different aspects of funding. We'll dig into the nuances of matching fund contribution requirements to help you navigate the complexity, hear the tips and tricks, and meet people who can help you secure your matching funds. You'll learn about subjects like capital stack, eligible sources, shopping for matching funds from multiple sources in a single process, and more. We'll get an overview of the rules, look at the year ahead, and hear the tips from our grant applicants on lining up your matching contributions. You'll be the first to know about the new tools and resources built to help broadband grant applicants navigate the matching funds marketplace. So with that, let's jump into our first episode with our friends and exclusive sponsors and co-founders of Ready, Jace Wilson and Mike Fallon. Jace, Mike, and the Ready team built Broadband.money tools to help smaller and non-traditional broadband grant applicants build complete applications, including matching funds from many providers. Chase is the co-founder and CEO of Ready, and he's easily recognized in his Broadband.money trucker's hat. So in Chase's honor, I thought I would put on my fiber broadband hat. There, I'm good to go. But prior to Ready, Chase was the CEO of two community development startups, and he's a Y Combinator alumni. He has a BA in urban planning and design from the University of Missouri, Kansas City, and studied design and development at MIT. Mike Fallon is the co-founder and COO at Ready. Mike worked with Chase at their previous startup as the chief strategy officer, and he has a long financial management career at Standish Mellon Asset Management Company, culminating as the chief operating officer. Mike has a BS in finance from the University of Maine, a master's in finance from Northeastern, and a master's in financial engineering from Stevens Institute of Technology. Mike's also a Y Combinator alumni. So welcome, Chase and Mike. I'm so excited about this series. And for our first episode, let's set the stage as we kick off with the intro to BEAD matching funds. So please put any of your questions into the chat as we go, and we'll get to them during the Q&A. With that, I'll turn it over to Chase and Mike.
Gary, you're amazing, dude. Nice hat. Thank you for joining us, making time, everything that you're doing to get folks connected. Super exciting to get to hang out. Gary, we want to say thank you to you for the idea of where's the funding, right? When we were talking earlier this year, you said, what can we do to help these local providers and these Fiber Broadband Association members? And then you graciously agreed to share all this curriculum of a show that you came up with to the broadband community. So thank you. And to the Fiber Broadband Association, y'all are amazing, very hardworking. You know, you're one of the most important organizations doing hard work at a critical time. So, you know, we appreciate you. And then folks that are on the call, like we figure you're in broadband, you know, so in that sense, like, you know, that makes you really good in our book. You're helping get folks connected. You're in for a really big, busy year. So, you know, we want to jump right into this stuff. Okay. Let's see. Gary, can you see our screen?
Perfect. Let's roll.
Okay, awesome. Let's do it. So, y'all, as Gary mentioned, there's going to be a bunch of amazing upcoming talks in this series. You know, we'll probably be the least qualified people in the entire series. You're going to hear from some true industry experts. We thought we would join Gary on this first one and hang out with y'all to get the party started with trucker hats and chocolate coins. You know, so, but, you know, next month, like, tune in. There's going to be a really great deep dive presentation on the matching funds nuances of BEAD, and then lots and lots of really interesting topics. But today we thought we'd just jump into, intro to the BEAD matching funds to get folks started, because, in this case, as you folks know, like, this program it's the largest ever investment in broadband that America's ever made. It could be the last. But one thing that was very clear from Alan Davidson and the wonderful team at the NTIA from early on is that the matching fund component is a hardline component in most cases. And Alan had a vision for making sure that the matching component wasn't just 25%, that that's a floor and not a ceiling, right? And we'll hear more from Mike about that later. But this all means that, this could be a major impediment for lots of local providers. How's it going? It's good to see you.
If anyone doesn't know, we're doing this live at a conference. So
yeah, thanks, Mike. Mike wanted to go for something like a Antiques Roadshow ambiance in the background, so we're doing it live, and hopefully you can hear us okay. But it's at the U.S. Conference of Mayors with a bunch of amazing local leaders who are about to gear up to help make sure that their cities and the partners that they're working with get their share of these resources. So, so the question to you, first of all, is like, how are you going to fund your BEAD proposal, right? Knowing that you're going to have to submit, along with your application, proof that you have at least 25% of what you're applying for. In many cases, that can be a huge structural impediment, right? And of course, on this matching funds, the difference of it being upfront with the proposal rather than in arrears after you're awarded is new to this program, right? It's unique to this program, but it's one of many interesting differences, right? So of this program against other programs in the past, right? Just a quick bit, like, why are we doing this? Like, we build tools to help broadband providers connect more families and businesses to better broadband services. And, a year and a half ago, we started a process of building out Broadband.money to help make sure that folks that are out there rolling up their sleeves and getting folks connected are able to participate in these programs, even if they don't have a huge army of grant writers, a huge army of lobbyists, and all the resources that are necessary to, do the full-time job of getting folks connected, keeping them connected, while also applying for these grants. So we built this full lifecycle collaboration platform for you to help you make sure that you have the data, the research and development tools that you need, everything in one place. And, later in this year, there's going to be a really awesome opportunity to show you this. But, for folks that are interested in matching funds, there's going to be a matching funds marketplace that goes live. And if you go into Broadband.money, you can schedule a demo. You can, go see it in action. There's all kinds of amazing stuff, right? That's going to help you to make sure that you have the research and background and context that you're going to need in order to, make your case to funders, whether or not you go through the matching funds marketplace or you go and have individual conversations on your own. You're going to need the letter of credit. You're going to need, and Mike's going to go through a bunch of different potential sources. You're going to have a ton of fun. So, but, one quick thing that we wanted to share before we get into the mechanics of BEAD is that the matching funds component, in many of your cases, it's going to be the hardest part of your grant journey, right? And the grant journey is no easy task, as you know. For folks that have already done this before, it's an extraordinary amount of work. But in this case, the unique and steep requirements of BEAD in particular, to have matching funds up front, to, have that proof and everything, it's viewed by some as like an unfair policy. But our point to you is that it is what you make of it, right? And while that's true that it could be viewed as an unfair policy in some senses, we also ask that you view it as a clear signal, right? That your project and proposal is validated by folks that are willing to stake, up their reputation, their assets, and get in partnership with you to make sure it gets done, right? So, and you can say, yeah, it's a local barrier, and that could be true. Our job here at Ready and at Broadband.money is to make sure that local providers, small providers, innovative providers have the tools and resources that they need for going after these things. We ask that they don't think of it as a barrier. We ask that we think of it as an opportunity to align incentives with folks that can help them to grow their network and to get more done, right? So when you get your matching funds, you get it from the right folks, and you have these new partners, like, the right partners. If you get the right partners, they're going to help you go to grow your network, get things done, right? Be in the excuse removal business for you, as as one of our friends from Carlisle Infrastructure used to tell us, hey, and finally it's like, yeah, it could be a political tool in some of your states. And again, some of this is going to get down to your state and what they end up doing with it above and beyond the BEAD NOFO. It could be viewed as a political tool, right? And that's fair and valid in some of your states. But we ask that you just consider that it's also a really interesting market approach, right? That it is a really interesting expression of capitalism, and that it's really interesting to see this component of a program that could otherwise say, we're just going to like throw all the money into, say, municipal networks, which if you're building municipal networks, awesome. You have a bunch of tools at your disposal. If you're doing partnerships with munis, if you're doing anything like that, like you have a bunch of really awesome options. But we ask that it's in your mind, like it's what you make of it, okay? So I'm going to shut up, but it was really good to talk to y'all. We hope you're excited about this series. We invite you in the comments and afterwards in the follow-up on the event page, like, drop any suggestions, ways that we can improve, like anybody specific that you want to see. We're working to finalize all of the guest speaker schedules, right? These folks, as you can imagine, are fairly busy folks. So, some of those dates might shuffle just a little bit, but, we really want to hear your feedback too. So if you got anything, let us know. All right. Okay, cool. Mike Fallon.
Falloon it is.
Falloon.
Don't let the matching funds knock you out, right? Don't be like the bull here, which, by the way, is not me, the bald head and the goatee, knock you out of the process. Get started. Get started now. You've got to start lining up those capital resources. You've got to know where you're planning to go, despite the state still coming up with their 5-year programs. And really, Jace has said this, can't emphasize it enough. Unlike RDOF, unlike CAF2, where you could line up those capital resources on the back end, specifically the letter of credit, which is going to require you to raise equity capital or potentially more debt capital. All the friction with the BEAD program is front-loaded as opposed to back-loaded. So you've got to identify those sources of matching funds up front. You've got to get the letter of credit when you put in your application. You've got to get an engineer to sign off on your network design when you submit the grant, not afterwards. You're not awarded the grant and then you're able to do this. It all has to be done up front prior to submission. And here's a term that you're going to hear ad nauseum for those of you who may not be familiar. The word capital stack. What is it? Well, generically speaking, it's just the capital resources you're bringing to bear in order to finance your balance sheet or the project itself. And here's just an illustration of a very general capital stack. 50% of the project, let's say, is going to be a grant, 25% is a loan, and I'm bringing in 25% in equity from outside sources. Those can be friends and family. I don't know if they're going to be able to come up with that level, or angel investors or private equity firms, potentially even venture capital you may see in this space. Who knows what it's going to look like in 3 to 6 months. But with that said, there are a multitude of financing tools at your disposal. Obviously, we mentioned private equity. There's also private credit, bank loans, of course. But there's this thing called project finance, which we can get into. And an important gotcha that we'll go over here momentarily are working capital loans that are going to be essential in the build out of your networks. You can use other grants, specifically grants that were part of the coronavirus programs, CARES Act, ARPA funding. Those are eligible. You can also use Reconnect loans as a potential match, and sort of a hidden tool that you're going to hear about midway through this program are municipal bonds. And if you're interested in public-private partnerships, that may be a financing tool that you're able to leverage. So some questions to ask yourself. We talked about raising equity. And we know a number of smaller operators tend to be owned mainly by their founder or a couple founders. You need to ask yourself, if I want to go out and build out these projects, if I'm going to obtain a letter of credit, am I comfortable selling a piece of my business? How much of my business am I comfortable selling off to outside investors in order to bring that equity into my business and unlock these other pieces of the capital stack? Other pieces of the capital stack, how much debt can my business service? Now and in the future, when this network is built out, what can I actually service? Now, if you answered the first two questions with a no, or I want to explore other options, there are other options. One is project finance, where effectively, another company is created, special purpose vehicle, typically an LLC is created. The capital comes into that by outside parties. You sign an agreement with the new entity. You become the operator of that. You don't necessarily own the network. There are things you can do on the backside to own it long term potentially with the financier. That comes in 100 different flavors. And then, as I had mentioned, should I explore public-private partnerships? Obviously, you want to work closely with the community. It's going to be a key element of unlocking these grants, getting community sign-off, and that pathway can unlock financing vehicles that may not have been available to you. They can also be things like transfer in kind, which can be used as a match for things like right-of-way or pole attachment agreements. So Jace had alluded to this, and I can't emphasize this enough. 25% match is the floor. It is referenced more than once in the NOFO from the NTIA. And if you think you'll only need 25%, you're probably not going to win. They outline a specific example in the NOFO where if two projects are identical, the one asking for the least amount of subsidy is going to be chosen because they're trying to maximize those government dollars to go further. And they really want to see private capital come in a big way. Here's an important one. Again, unlike RDOF, unlike CAF2, states are encouraged, and we'll know more as the state-specific programs come out in the middle of this year. States are encouraged to release the funds once milestones are achieved. You're not going to receive this grant funding up front. You're going to receive it on a schedule of milestones that you'll need to unlock as the operator, which means you're going to need working capital to pull off these projects. You're going to have detailed planning around your capital needs and your project management. Again, we've said it more than once. The letter of credit is going to be required up front. It needs to come from a U.S. Banking institution, and it's modeled very closely to what you saw in RDOF. It needs to cover 25% of that award, and typically what we've seen in working with some RDOF winners is the bank is typically looking for cash on the balance sheet, equity equal to that letter of credit. So that's why it's incumbent on you to start this process with banks now. You're going to go through an underwriting process with a bank. Also important, we do see a lot of new ISPs coming online. The NTIA has thought this through after learning from RDOF, where some new ISPs who didn't necessarily have the operating history had received some grant funding. You must submit your previous year audited financials, and if you don't have them, you'll need to get them. And you must have at least 2 consecutive years of operational history as a telco or an electric utility before you'll be grant eligible.
Hey, yo, you got this. It's probably daunting. It sucks, right? But it's like the vegetables, you do this right and it's going to actually strengthen your project. So keep that mindset, keep that hope. Like, let us know how we can help, but the main thing that we want to leave with is like, get ready. Right, it's time. Even if you're waiting on your states, the wait and see attitude is going to fail you. Okay, you need to be researching things like where you're going to want to grow, right? And if you need help doing that, there's free broadband audits that show you, existing service providers, stuff like that, on broadband.money. Like, and you need to learn those funding options. That's what this series is Gary's, came up with is supposed to do. Right, but we want to leave with something like, you're in the community, like make sure to check out some of the other events that are coming up. There's all these great Ask Me Anythings with experts, right? We have several of the state broadband directors coming on over the year. Upcoming, we have Jade from Kansas. We have Ernie from Indiana. We have Dr. Tamara Holmes from Virginia. Like, these are some of the coolest state directors, and there's gonna be plenty more. And we got folks like Catherine DeWitt from Pew. She's like the Pied Piper of broadband directors. Like, she's extremely, depth of knowledge is great. Like, This Friday we have Ernesto Falcon from the Electronic Frontier Foundation. Extremely lively. He's gonna be talking about California and his work at EFF. And then there's a bunch of other resources there. Just want to give a shout out to that. Okay, you're not alone. Okay, there's a community, the broadband community, and that matching funds marketplace is going to save you a ton of time. You'll be able to do, from a single application, talk to dozens and dozens of different prospective investors, sharing what you want to share when you want to share it, being on the same page with your collaborators. All that stuff's great, but none of it matters if you're not willing to get going now. So that's what we want to say. But yeah, back to you, Gary. And thank you again, everybody that's joined, for making time, and Gary for coming up with this wonderful series and all you're doing.
Well, Chase, Mike, let's get into some Q&A. Tons of questions. So first of all, you guys are going to be able to provide a copy of these slides for our audience, right?
Absolutely, yeah.
And how will they find that slides?
Google?
Send them out? Or?
I don't know. Well, I don't know, folks. We're going to drop them into the event series so that folks can see it on the page.
All the registrants. All right, so let's
do that.
Let's the first question. So, one of the questions that comes up often is when not can you use other government funding, state, local, federal, for matching requirements? The answer always seems to be it depends. Is there a interpretation of various states and federal programs on the rules that really, is there a rule of thumb? Is there some case by case every time that you can be able to determine when I can use a certain state, local, or federal program to use my matching funds?
So the NOFO was pretty clear around the types of other federal programs you can use for a match. It was explicit that you can't use any grant funding from the Universal Service Fund. That would include RDOF or CAF2. It does allow for grants from regional commissions like the Northern Border Regional Commission or the Appalachian Regional Commission. I'm not sure I got that perfectly right. And certainly the CARES Act and ARPA are things you can match. And I do believe you can also match the Treasury program, which was part of the ARPA funding. So you can blend those two grant programs as a match.
So what's the runway? So right now we're looking at, each state has, all 56 states and territories are going to have a program, and none of these have announced what those programs are yet, right? So we're a little bit guessing based on the NOFO. But ARPA has been out for a long time. The Coronavirus Capital Projects Fund's been out for a long time. The all the others. What's the runway? I mean, won't those be allocated by the time that these programs issue and you put in your applications?
Well, think about it as if you plan the right way, if you're coming off of an existing network where you use that funding and you want to expand that, I could see a use case or you can make an argument where the total project cost is X, and I've already put this much in of private capital as well as federal monies towards that project. So there will be some level of creativity. Now, the ARPA funding, as you're aware, didn't necessarily go through the state broadband offices. Some states it did, some states it didn't. It was either at the county or the local level where it was deployed. And there needs to be a reconciliation of where the money's actually been spent before we get into allocating any more or any of the BEAD capital.
So, Mike, given that you don't get the funding until after the milestones have been achieved, that's going to put a lot of pressure on anybody's cash flow. So how should operators think about this and be able to be prepared to be able to cover all that?
You've really got to have a great relationship with your banking partner. And if special guest there. So I've been fortunate enough, not in broadband, but with other federal grants, where the letter of credit was written by a local banking institution. They also provided the working capital loans, which tend to be anywhere from 1 to 2 year type revolver instruments where they know you're getting these grants. We're going to extend this money out to 12 months. They also are going to want to know your construction timelines and milestones and be closely coordinated on when they're releasing that money to you. And then when you submit the receipts to the broadband office and you receive the money back, you'll pay off those working capital loans.
So
can I add to that, Gary?
What's that? Yeah.
Could I add to that?
Yeah.
You know, there's also the opportunity to help these state directors as they're finalizing plans to make sure that that's called out as an issue, right? That sort of that's one issue that would uniquely affect, small, innovative, like non-traditional providers, folks that don't have a massive balance sheet sitting around, folks that don't have access to the capital markets, like folks that don't have like available credit from a bank, like, making sure that they have that as needed is something that the states, the state directors can think about in their policies and making sure that there's coverage for that. Like Mike was saying, there are tools in their toolkit that they can add and say, we're going to actually have it set up this way, so.
Yeah, there seems to be in everything you hear a desire for local providers to be involved, and certainly those ones that are engaging the community to be involved. But when you look at the capital rules, a little bit of a crutch, a little bit of a hurdle for them to actually get involved in a big way.
Yeah. So it's fair that it's like there's a ton of work to do to get it done. Again, it's like a clear signal that like your project has, a lot of people that have a lot of resources, see you and what your project entails as having what it takes as a sort of like literal chosen one, in that area. Like that's awesome. But at the same time, this aspect of like you said, Gary, keeping that pressure off of, the local innovative providers when they actually start to deploy to make sure that they've got what they need is a key point. So wrote it down as a thing to talk about with all these state directors. We'll make sure to ask it in the Ask Me Anythings too.
Yeah, I mean, the cash flow is king, and that's a big challenge because not only do you have to have cash flow to get to your milestone, but you have to, until you turn up your actual customers and you can start seeing the revenue stream, it's just for your debt service and everything, there's just a lot of cash flow pressure.
It is adding an element of risk to the business that wasn't necessarily there with a program like RDOF.
What about, letter of credit? It seemed like when the people saw they had to have a letter of credit, that freaked a lot of potential applicants out. Can you kind of drill down on, your strategy? How can people kind of mitigate this whole concern, over getting a letter of credit?
First, you've got to understand where you're at. I would start conversations with banks in my local area if you understand how much money it is that you're going after. Again, it's 25% of the award. So $100 million project, let's say, I'm going to do math live. This is never good. 50% match, 50 million. It's a $10 million letter of credit, I think.
Fact check your. Yeah.
Don't check my math. Anyway, it's like a $10 million letter of credit. Start to. I'd like to think that all the ISPs have a banking relationship. Start with who you know. Determine what their appetite's going to be. Obviously, they're capital constrained with what they can provide for a letter of credit because it goes directly against what they're able to lend. It's seen as a loan, even though it's physically not. It's just a backup in case you fail. That the grantor is going to receive some money back. And you've got to start talking to banking institutions, and then in parallel, you need to talk to the private markets because most of those banking institutions are going to say, if you want to get to the next base or you want to raise a certain amount of capital, if you want to do a certain size of a project, you're going to need to raise a certain amount of equity capital specifically, which we are going to use as the credit for the letter of credit.
So this morning on Fiber for Breakfast, we were talking about, the UK is a little bit ahead of the US on their, national fiber rollout just because of Brexit, and they really had to be able to be competitive with fiber. And so where they're seeing now is a lot of industry consolidation. You have all these providers, and at some point for scale, you start to see some consolidation of providers. So, we have 1,200 fiber providers today. I could see at some point we'll start getting into, as we build out all this BEAD money and, depending if that's new providers and so forth, how much should, when people are thinking about their capital stacks, building their capital stacks, how much do they think about the implications of a future consolidation, a future merger?
I think quite a bit. I think you saw it
Great question.
with telcos. You saw it in cable. You're going to have, with the way these grants will probably be split up, it's going to be more of a federated approach, which is going to lead to a scale player coming in and combining entities for economic reasons. So I think it's going to play a major part 5, 10, 15 years down the road in the fiber industry.
It's a awesome question, Gary. Like, it gets back to, like, what do you want out of this? You know, it includes your vision. Like, what's your long-term strategy, right? If you're out there pulling fiber and getting the job done, right, and you've got maybe sometime you want to go 5, 10, 15 years from now and do something else, like, you know, it's important that you do think about this up front, like who's providing that matching funds and how's that structured, because you're absolutely right. It could help to, you know, determine the answers and like the range of possibilities that you have at that stage. So I wrote that down as something that we're going to put into the, you know, upcoming shows too.
I know we're out of time, and I'm going to leave with this cheesy little thing on that question, which is, look, for those smaller providers, fiber providers, ISPs, who are still founder-owned, majority-owned, it's inherently personal. They need to ask themselves what they want and where they want to be in that time horizon. So,
hey, well, last question: how should people think about broadband money? I know it's a tool that you guys have developed, and I kind of think of it like TurboTax for grant and things like that. But how should people think about that tool and how they should use it?
I just wrote down TurboTax for broadband grants, Gary, because that's a great framing. Real quick, 30-second version. It's a toolkit that's supposed to be an A to Z, right? Right now, you're in the phase of research and development, right? Your proposals are not being submitted anytime right now. You need to be able to understand where you want to go, right? So you need all that data at your fingertips. You need to be able to consume like lots and lots of disparate data sets in a single place without having to, you know, hire a team of folks to build out that stuff for you. You know, so that's there. Everything that you need to answer questions in a great way, right? Like all those tools. But then when it comes time to apply, it's also an application system where you can invite your collaborators, right? Including folks that you're going to be aligned with on your matching funds, right? Other stakeholders, vendors, right? Folks that are going to get involved with your, like, the high level design that you got to submit, right? Like, so it's a platform, you know, for all those stages. And once those things are submitted and you win, right, you have then the fortune of having 10 years worth of reporting requirement, right? And so it's the Z of it is like following that last report, right, and making it really dead simple to make sure that you're compliant at every level, right, from NTIA to your state and your local stakeholders. So it's a one-stop shop, but I think TurboTax for broadband grants is even better. So thanks, Gary.
Well, Chase and Mike, hey, we really appreciate everything you guys are doing at Ready and your work at Broadband.money, and, you know, and for being one of our partners on this very important broadband funding series. Please say hi to all the country's mayors for us while you're sitting there in the mayor's conference. And,
hey, mayors from the fiber community.
I want to thank everyone for joining us today and look back to getting back together next month on February 15th. We're going to be discussing a BEAD matching fund deep dive. You're not going to want to miss that. So we'll see you guys again in February. Thank you. Night.
Bye.
See y'all. Oh, new questions coming in. 1 second. There we go. See y'all.